Hey guys, Mike here. So we get to do our Saturday video where we answer all your questions you put in the comments for the week or emails or anything else. And then of course you get to participate in the comments because some of these you can answer as well and add on to, and really appreciate that. Or you can ask even more questions if you have those. And we're going to cover a variety of topics from your questions here. One is, I keep getting it and I'm going to try my best to make sure you understand it, which is fair value gaps, RTH gaps, why they are so freaking important. Unless you just want to be a retail investor trader your whole life, do your thing, okay? Don't pay attention to any of that stuff. Don't worry about how the market really moves, and you're fine. If you want to know how the market really moves and what mainstream media don't tell you and all this stuff, then pay close attention. I'm telling you, anybody, people in our Discord who discover it, they go, holy crap, that makes so much sense now. I'm telling you, it's an amazing thing. As well as, a lot of people were confused when I say the market's not the economy is not the market, and then I'll turn around and say, well, Bob is stinking because, and a lot of Chinese stocks are down because of their economy. And I'll explain to you why, right? Not every economy is the same, right? So we're looking at that, plus just a whole lot of the questions. And I'm going to end it on a topic that is very controversial, but it comes up, here and there. And the more research I do, the more I just don't get it. I don't understand how people can celebrate us doing this, but they do anyway. And I'm just like, boy, I think we're gonna look back 10 years from now and go, boy, that was a huge mistake we made right there. Okay. Now, of course, that leads us to Mike here. He says, hey, what is a fair value gap? But on top of that, the one thing I noticed is I got another one where, of course, I assume these guys don't really want to learn about this stuff, but it's like, Mike, you must be an ICT grad with all the fair value relative gap talk. And I'm not an ICT grad. He's the one I think came up with this, obviously, and I've looked at his work. It's great work and everything. And then somebody, of course, Sunrisen down there, sees gaps everywhere. He dreams about gaps. Almost true, right? I'm sure I think he even said I shop at Gap or something, which I do not. I do not shop at Gap, by the way. But yeah, and understand, here's what a fair value gap is. And do not complicate this. This is not complicated stuff, man. All right? It is popular among price action traders and occurs when there are inefficiencies or imbalances in the market, or when the buying and selling are not equal. That's the key here, okay? Fair value gaps can become a magnet for the price before continuing in the same direction, okay? So that's key. You got to understand this. And if you look at this, it is simply this. Get this down. Pause it if you need to pause it. A fair value gap is created when there's an imbalance between buyers and sellers, okay? You see that candle right there? You got to look at that. Pause this when you listen to this. Is that body of the candle, is it covered up by the body or wick of the candle to its left and its right? What's the answer? The answer is yes. Okay, the ones to the left didn't do it. The ones to the right did. That is normal. So there's no imbalance. This is when the market is moving in a normal manner. Okay, but these are really created. The most powerful ones when you have a quick move up or down. All right, that's when you get these, and this is how the market moves. Right. So you have an RTH gap there, by the way, fair value gaps, all this good stuff. So see that big candle? That was a fair value gap. All right, it got mitigated when the second red candle came down and mitigated, which means basically just balanced it out. That's all that means, okay? Now, we're going to keep this really simple. See those candles? That is a quick move up, right? This right here is an RTH gap, a regular trading hours gap. That happens, pause the video again if you have to, when the opening price, in this case, was lower than the closing price, okay? That's what happens. It's like a magnet, and you see what happened. The market pulled up, closed it almost to the penny before selling back down and covering that huge yellow candle, which was what? It was a fair value gap. Okay, so it's not like, understand, RTH gaps are actual gaps. There's gaps in the charts. Okay, fair value gaps aren't a gap. There's actually not a gap between candles. It's the body is not covered up. All right, look this up. I'm telling you, it will change how you look at charts forever in your life. I promise you. And this gets complicated. There's a lot of work you need to put into this besides watching this one video. But you see that right there? That is a fair value gap. Right above it, same thing. Huge liquidity grab moving up, okay? And there's a lot that goes into this just besides this. We're talking about prior days high, prior days lows. That's why I talk about these things. I might not talk about it as much anymore because it just confuses a lot of people. And so anyway, now I got this on replay. So you're going to see this was Friday. This is what the day we just went through, okay? And so you see this right here. And normally when you see this, you're like, we're going to get a move down. If it's a normal kind of move day, we're going to get a move down. Watch. To mitigate or balance out these fair value gaps. And you can see when I hit play, here we come. Boom, coming down. Look what happens. That thing right there, there's a wick on that red candle. And what happens is when it comes down, so we've mitigated most of these, right? And a lot of them will not be mitigated to the penny. But if I blow your mind with something, what really helps is having your Fibonacci, right? Which I'm not going to get into in detail. But when this is moving up, when you see the move down and you grab your Fibonacci right here and you go from the top of that move down to the bottom where it started at, a lot of times you're going to end up at the 0.5, but more importantly, the best one is the golden pocket, that 61865 right there, and it'll bounce. It's like magic how many times it happens, okay? And so that's why when I say this is more complicated than you think it is, I'm showing you the basics here. But if you really, really do your homework, you'll never look at charts the same again, ever. Okay? And so if we keep going, you can see, boom, hit that 618, mitigate all these fair value gaps, and then we start to move back up, right? So now we're starting to move in that same direction, that bullish manner. And what was to the left? Look at those big red candles when it came down. Those are fair value gaps because you had a quick move down, right? What's it doing? Once again, it's leaving all these fair value gaps behind, mitigating those. So what do you think is going to happen? And so you got to understand that. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. It's up to you. And I'm telling you, this can be used for investing. I did a two-part video on bottoms in the market, right? I'm talking about crashes, right? And where they stopped at. And if you remember, make sure you scroll through the members' videos. I think they're a month and a half old, and watch those two videos, and you'll see how powerful these things are. And so it absolutely can be used for investing. This ain't just a trading thing, but you can use this for investing to figure out where we're going, where you're going to get bounces at, where you're going to get big moves at, all that stuff. I'm telling you. And you don't hear mainstream media talk about this stuff, right? There's a reason for that. There is a reason for that, right? Now, next one here is the market is not the economy until they want it to be. It's hard to bet on a rigged game, which I can agree with that right there. And the one that goes along with this is now your argument for not buying Alibaba stock was China's economy is garbage, but not 5 minutes ago you said the economy and the market are not the same. This comes from Roy Smith. I have no interest in Alibaba, and then he goes on and talk about it and stuff. And understand what I mean by this. One, I'm not telling anybody not to buy Alibaba stock. Okay. Second of all, do what you want to do. Okay. But what have you seen in America? What is our economy based off of? You ask a lot of people. What we had a president for 4 years. All he talked about was what? The stock market, right? The stock market. That's where 70% of our wealth is, I believe. Okay. Now, what is China though? This is where different economies. 70% of their wealth is in the real estate market. And what have you seen China do? I'm talking about they just came out the other day, Friday, and talked about more QE, quantitative easing. Like they banned people from putting negative reports out about companies. They've come up and make it almost impossible to short sell the stocks. They've done everything, and yet a lot of the stocks continue to fall. In America, though, because ours is based around what people think is the stock market. I'll elaborate on that in just a minute. That they throw, if they even hint at pausing, the market's going up 20%. And you saw in 2010, 2020, they held rates low. The government was the biggest buyer of bond, all this stuff, and the market went on its greatest bull run ever. It's totally different, right? Because of what our economies are based on. All right, and understand, here I'm gonna show you what I'm talking about. Look at this. All this big move. You've had moves from around the world. The European stock market's been doing great and everything. And then look at the Hang Seng Index here. This thing is at a point where it better bounce. I mean, look at it. Our markets rallied, Europeans market rallied like crazy, and there you see the Hang Seng Index. Over here, you can see Shanghai. I mean, they're all at these critical levels, so am I expecting to bounce? This is why a lot of people, and it might be a good time to actually, I'm not saying ever buy Chinese stock, but again, because I just don't like the government, you don't know what they're going to do, but this is that level you would think about it. But look at this. This is the problem. Chinese property stocks. Look at this. Look at them. They're in the dump. They're trillions of dollars in debt over there. They're trying their best to bring it up, but it's easier to fix a stock market than it is a freaking real estate market. It's the way it is, right? This came out like 3 months ago. No end in sight to China's property crisis as new home prices post sharpest decline since February 2015, right? And there's just no end in sight for this. And so understand, our market, when it reacts off something, it's reacting off what? It's reacting off the bond market. That's the thing you got to understand. The bond market is way bigger than the stock market in America. Way bigger. We just don't talk about it. That's why I'm glad this has happened. I'm glad we've had these sell-offs when we do, bond sales the government's been doing. They haven't been going well people don't understand the stock market doesn't exist without the bond market, because people sell bonds so they can run these companies. Our government doesn't exist without bonds. I mean, what do you think's propping up and paying for half the junk, right? Because everything's on a credit card, right? It's not like our taxes. The taxes barely pay anything around here anymore. They don't bring anywhere near enough taxes anymore because the spending's got so far out of hand. And so the bond market is way more important. That's why I talk about HYG when it comes to leading the stock market. The bond market does it. If you see smart money buying into rallies, you need to be buying in too, because that's what they deal in all day is risk. The stock market is nothing but a freaking slot machine. It's Las Vegas, right? It's a casino. You see these crap stocks going up 100% in 2 days. You know, what is that? You think it's fundamentals? No. We have 33% of the IWM are freaking companies that haven't been profitable in 5 years. They're zombie companies, but what keeps them going? Debt. They're able to somehow get suckers to buy their bonds and everything and keep raising and raising and raising. That's the way it is. And so when the news comes out, what the stock market to me is based off of, and not totally, but for a lot of part, it's reacting off what the bond market does. So if you see yields just plummet, what happens to the stock market? Oh, we're going up. If the yields spike and the bond market goes, oh, this ain't good, what happens? The market goes down really fast, okay? And of course, we all know, yes, you get melt ups, you get exuberance, you get all these crazy rallies. No ifs, ands, or buts about that, right? When does the stock market become the economy? It's right before the crash. You would see the stock market will sell off before an official deal gets here. That's why 2022 sold off, because they thought there was going to be a recession. They always try to get ahead of it, and that's why it bottoms when things are at their worst. If you pull up, which I've done for the members, the unemployment rate, when a market bottoms, it bottoms way before the unemployment rate stops going up. Way before. All right? Everything's getting really, really, really bad as the market's moving up, and that's why people can't believe it. They're like, it's so bad. How can this be? It's another bear market rally. That's what I'm talking about, okay? Now, next one comes here. Can you please tell me what chart software that is? I think you're talking about this. I'm using TradeView. It's really simple right here, and again, you can go ahead and pick your own plan. Link down the bottom. I'm just kind of married to it because I like it so much, and it's hard for me to change. I've tried changing to different systems, but I don't know. I just find this the easiest one for me. Where do you get the seasonality graph? There's a couple places to get this. I actually pay for one, which is Equity Clock, but another good one that somebody told me about was, obviously we all know about the Stock Traders Almanac. They have it as well. I don't know the difference in prices. Again, I don't have no links for this. I don't care which one you go with. There's probably others, so put in the bottom if you have some others you like as well. And now that leads me to the subject, which is definitely controversial. And again, I am no expert at this. I don't pretend. I'm just trying to use common sense and numbers, and just trying to, and also understand how companies think, right? Because I've been in management before. A lot of you guys have been in management before, and I've showed you countless times about the amount of greed is unbelievable. If people don't believe that, they didn't live through the great financial crisis of 2008 when they saw that crazy mess they did there, okay? And there is no accountability, so who cares? But the one, I'm talking about here is really, whether you want to call it AI, robotics, whatever you want to call it, right? I don't know if you saw Google's presentation of, the new AI stuff they're rolling out. Obviously, you got Microsoft. There's this huge race now. The race is on, right? It's almost like, trying to get to the moon, right? That's what we're doing with AI, and all these companies are trying to do it. And understand, my premise is simple. All these companies are trying to do, they're not going to tell you this, but all they're trying to do is cut their costs. How do you cut costs? You get rid of people. Why do you get rid of people? Because robots don't get paychecks, and they don't get benefits, they don't get hurt, they don't get sick, they don't have babies, they don't require health insurance, nothing. They don't have to pay for kids to go to college, nothing like that, right? You just program and they go. And then they're self-learning, maybe they self-learn, I don't know. But, that's what's happening. And so I want to show you this really quick clip, right? If you didn't see Google, what they're rolling out. And understand, this is not a person. This is not a child who's growing up and learning. This is a machine that's looking at this and talking.
You are trying to get me to find the paper ball under the cup. I accept the challenge. The cup to the left.
Nice.
The coin should be under the right hand.
I don't know.
The coin is in the left hand, using a sleight of hand technique to make it appear as if the coin has disappeared.
And of course, that's something simple. But remember, you got to think of where we're going to be 10 years from now. With these NVIDIA chips rolling out, AMD's rolling out new chips, all these companies are trying to get more and more advanced in this, right? And I swear I can't help but think of Terminator, the movie, when I see this stuff and talking about these chips and everything else. But the reason why this is a big deal, what I think about, is because if you're coming up with robots, and I always say keep it simple, right? Look at Walmart, look at a Publix, look at your grocery stores where you all go. What have you seen over the years, the last 10 years? People are just disappearing, right? Why? Because now we have to work for the stores. We have to go check ourselves out. But again, people say, oh, well, they're going to create jobs. What jobs are you creating? They'll tell you that. No. It will make no sense to bring in these robots and these self-checkouts and then put the person somewhere else. You're not saving money doing that, right? And all you're doing is upsetting customers because most of us don't want to go do that and check ourselves out, right? And the big thing is the two companies to watch are going to be Walmart and Amazon. Why is this? Because on the global scale, United States-based and largest private employers, right? They have an unbelievable amount of employees. Just those two companies. This is just two companies right here, right? Look at this right here, largest employer by state, and you can look this up. Some people are saying it's Amazon, some people say Walmart. I think it's Walmart, but depending on who you go with. But either way, these are by far, Walmart's usually number one. Amazon's in the top 5 of any kind of source I could find. In some states, it's obviously number 1, depending on. But the key is, look what they're talking about here. This isn't something new. Walmart has revealed plans to automate approximately 65% of its store services by end of fiscal year 2026. So only 2 years away. Amazon, what are they doing? Look at these robots. They're sitting here, these big robots here to do the sorting and stuff that people were doing. And then look at this right here. If you go down, you can see, what's the title? Fears of employee displacement as Amazon brings robots into warehouse. The company's ambitious drive to integrate robotics across its sprawling operation has sparked a fear that the effect on its workforce of almost 1.5 million humans. Yeah, you think? And if you don't believe that, look how many robots they got now. This is the number of Amazon warehouse robots. If you scroll down, 10 years ago, they had 1,000. 4 years ago, they had 200,000. Look at how many they have now. 750,000 robots across that company right now. All right, and when you look, why are they doing this? Amazon workers made up almost half of all warehouse injuries last year. That is workman's comp, baby. That is an employee's worst nightmare, honestly. But you can see right here, Amazon employment has fell in 33 different states from December 2021 to January 2023. And a lot of people say, well, that's because they overhired, blah, blah, blah. I'm like, okay, I guess the increase, like literally doubling the amount of robots in the warehouses had nothing to do with it, right? You know, I tell people, wake up, folks, right? And you hadn't just seen this in these two companies. Ask anybody who worked for Ford or GM or any of these companies right here. Right? It's not a surprise. From 1994 to 2018, manufacturing employment declined 17%, while the productivity increased by 13%. Why else do they want to do it? They don't want to go through what Ford and GM and the other car companies went through with union strikes. They just don't. Robots don't go on strike. Look at that. It's amazing how it works. But it's common sense tells you, don't look at what's happening now. Think 10 years down the line what's going to happen. Elon Musk himself, who is way smarter than anybody I know when it comes to this subject, even said, yes, humans are going to be displaced, and they're going to have to come up with a universal income. And remember, companies, you're saying what I was saying, if you don't have those employees and they're gone and they have no income, where's your customers? They don't care about that. Remember, executives will only be around for about 10 years, max, unless they're the founder. About 10 years. And they're going to be multi-millionaires. They don't care about that. Plus, what else do they know? It's the government's problem. Because every employee they release does what? That's one less taxpayer. They're going on welfare. They're going on unemployment. So the government's going to figure that out. It's not the company's problem. All they worry about is the shareholders and the stock price. That is it. They don't care. It's as simple as that. All right. So again, just want to get you guys' input on that. I know some of you guys work in that field, and it's always a controversial subject for sure. But let me get your thoughts on that. And again, if you have any questions you want to see in next Saturday's video, put them down at the bottom, comments and everything. I really enjoyed doing this video as usual. So hope you guys have a good one. Please hit that like and subscribe button, and I will see you tomorrow to set up the week.